Talk with Rich and Lisa. We are your hosts, Rich and Lisa Small. Hey, thanks for joining us today.
And today we have an award-winning 5-star mortgage professional. Joyce Mc Quaid is going to be joining us and sharing her vast knowledge on the subject of mortgages.
When I posted yesterday about Joyce being on our podcast, some friends actually wrote in and said that they knew Joyce. They knew Joyce from when she lived in the Briarcliff area. And somebody actually said she is a great softball player.
Definitely good to know.
Yeah.
For the future.
Yeah.
Well, Joyce, I have to say, we've been looking forward to having you on.
I'm excited to be here. Thanks, Rich. Happy New Year to you guys.
New Year to you.
New Year to you.
And
Thank
it is
you.
kind of cool that we're in a new year with the prospects of the year in front of us, right?
I can't, it's obviously when the calendar turns like that, you always count your blessings, but I'm ready to leave 23 behind in at least the real estate side. And I am so looking forward to this year. A lot of exciting things out there going on.
We are too, Joyce. We can't wait to see how the spring market's going to turn out this year. We've heard a lot of people saying that they're enthusiastic about it and very positive about it. And we have a listing coming up very soon, which we can't wait to get the information out and get that sold.
You know what's going to turn this market, and it has started already, and we're only the 10th of January, is listings. So kudos to you guys. You know, you're making a difference out there. That's what we're seeing. We're seeing more listings, and that's going to turn this real estate economy around for sure.
Yeah. Yes, and the lower interest rates coming down. That's
we're seeing it. We're definitely seeing it for sure.
I think that's a mindset in people's minds about lower interest rates, especially people that have a 3% rate, and then do they really want to go and get a higher rate? But now that they're coming down, it's not as it's not so bad.
It's not as scary. It's not as scary for sure. And the old saying, you marry the house, you date the rate, and it's really true. It's really true. So, yep. We're definitely on that side of the fence where we're going to see rates improving. It'll be slow, but it still will be improving for sure.
Yeah. And that's a good sign. So people can kind of hang their hats on that, hopefully we're going to have a good spring. We just had a company-wide meeting on Zoom with our broker, and he's very enthusiastic. He's very confident that this spring market actually is going to be a good market.
Oh,
and we need that.
I'm all about it. We all do. We all need that. We all need that for sure. Yeah. For sure. Well, there's definitely a lot of exciting stuff on the mortgage side. I'm excited to share it with y'all.
I can't wait.
Yeah, but we've been waiting all week to talk to you, and just, let it loose, Joyce.
Oh, I'm going to let it loose. I can tell you this. I can't give you 3% interest rates back, guys. That's a thing in the past, and I'm an old workhorse. I have been in this industry since 1985. I have been doing mortgages since 1991. And it's all I know, grew up in real estate, family of real estate, bought my first house at 18, investment properties as well as residential, pretty much Delaware County all my life, but I have ventured out into the other side of the river in New Jersey in the last 2 years. But what I do know, real estate's the same and buyers are the same everywhere. You have that apprehension when you think like, oh, wow, I want to buy my first house. And you have all that stuff that comes out in your head like, I don't know if my credit's good enough. I haven't been in my job long enough. Or, you say, I don't have enough saved. Like, where do I start? What do I do? And that's why you guys doing a podcast like this and getting it out there for buyers. Hopefully we can touch one or two people that maybe they can tell one or two people that, wow, like I'm not out of the game. I might be in the game,
Yeah, you're right. That is the biggest misnomer, I'd say, in the industry. People, they disqualify themselves before they even get out of the gate. And all the more reason to have somebody like you on the show with us today so you can give people confidence to move forward.
There's no doubt about it. I always like to empower the borrowers, Rich and Lisa, because and this is education without obligation. This is a free service, and I want to do it and educate. I bought my first house at 18, scared to death. Was a couple $100s short. My older sister by 5 years had a tap Mac at Wisfis at the McDade Mall and run down money to the settlement table. And it's a true story, but it led me to always know that when I got into this industry, I wanted to gently guide and hold hands and make sure everybody has all their options, because there are a lot of ambulance chasers out there. And there's the internet is so fast, and, rocket this and fast this, and it scares you, and it doesn't give you the accurate information all the time. And I love to get everybody's foundation right the first time. And, with that further said, I'd love to, go into some of the things that we can offer. I just didn't know how you wanted to coordinate this for us.
Go.
If that works.
Yeah. Let's go.
Definitely.
Okay.
Yeah, I want to hear it.
Yeah, I mean, the first thing to know is the buyers out there, and by buyers, I don't mean first time buyers, even those apprehensive selling buyers that, the sellers out there that want to move up or move down, or they're scared because, like you said, Lisa, earlier, that they have this low interest rate and they don't want to give it up. But that being said, no matter if it's a first time, second time investment, residential, you want to just always make sure you put your house in order and it's your comfort zone. Everybody had hopefully beautiful holidays and they spent time with family and friends, and you go over to their house and the first thing you say is, "Oh, wow, I want this. This is what I want," and, besides the decorating aside, you want to be able to know that you're buying within your means and nobody else's. I think that's the biggest piece of advice I'd like to give. You don't want to test drive as I always say this, you don't want to test drive a Lamborghini when you can only afford a VW. Right? So you want to be able to know you're staying in your right lane. And why we do that, and to maybe compound some of the fears out there are programs if you're worried about your credit. There are programs if you're worried about your savings. There are programs, for our veterans, for our teachers, for our community workers, for our doctors. There are so many programs that are out there that we can customize. Some are niche, some are normal, and we can customize them, to the borrower's needs. And, where you start first is here. And by here, I mean with your expert real estate agents that can guide you to a lender. FCCB is wonderful. I have been there, used to be called HVB. I've been with them for 10 years. And they are a strong bank located out of Doylestown. I'm only saying this for a reason, because you're not a number, you're a real person. It's not an 800 number. It's not, we have online apps and all the fast stuff but we offer the hand holding. We offer the same team that's been in place for at least 9 years, underwriting and processing. And that's important.
That's very important.
Yeah. And it happens all under one roof in Doylestown. And that's kind of cool. FCCB also offers the first time buyer programs. And to kind of take that the step further, let's say, where do you start? Let's just, okay, Joyce, stop talking. Let me hear, where do you get started? Well, the first thing you want to do is get in touch, right? And, Lisa or Rich will hook us up by email or by text, and we'll have a light conversation, and I'll explain to you something like this. You're going to fill out a mini application for me. We're going to Zoom meet. If you want to take, if you're worried about the Zoom and you never did that, we can do it by phone. It's not, I like the hand holding because I think it's important. But we take your application and say, okay, what are your goals? Well, Joyce, I want to buy within the next 6 months. My lease is up in March, and I don't have a lot of money saved because Christmas just tapped me out. And I have a little work to do on my credit. And before you look at anything, I want to put some more money in the bank. Well, I'm going to tell you, don't do anything until you talk to me. Mm-hmm. Don't try to make yourself look pretty and wrap yourself up in a bow for me. I am let's put this word out there, a confessional. It's your secrets are safe with me. It's a no judgment zone. It's me guiding you to where you got to be. As a borrower, I can help you get that house in order. I can help you with the budget. I can give you some aha moments in your budgeting that tells you by looking at a pay stub and a bank statement and a quick conversation, I can kind of guide you and say, look, guys, you might not be ready now, but I'm going to set your table now so you're ready for 6 months from now. So you're ready for a year from now. We do that as well. Lisa and Rich, you probably always come across, buyers who are worried about their credit. They overextended, or it could be a divorce where he or she kind of screwed up their credit. It could be a parent that screwed up their credit. It could be just bad judgment as a teenager going into college, when they send you all that free money and you never knew how to pay it back because you weren't taught. All of that stuff is there. And what's cool about that is I guide you. You'll fill out, we'll have a quick conversation. You fill out this application and we figure out your goals and your comfort zone. Then I say, well, guess what? We can't do anything right now. That's okay too. Like, I'll never say no. I'll do everything within my power to get you on the right track. And the guy and Lisa and Rich are really good about this. And I know you guys are because I've known you for a while. The follow-up to make sure you're on the right track. If you need accountability, I could be at your front door, and looking at you with them eyes going, oh, you better have paid that bill. No, I won't do that. I'm only kidding. But I will say this. We do have ways that, like, drip campaigns where we can touch base with you once a month to make sure you are on track.
Right.
One of the biggest things I find in my career, that besides all the fear, I have a lot of people that think they're never able to buy because they were told that by other people.
Yes.
And other people were looking for maybe the bigger, the golden goose, when we're looking to get you in your first home and then get you in your second home and then get your cousins in their first home and second home. And right. Lisa and Rich, you kind of work that way. And it's like we're about the relationship, not about just a 30-day wham bam and see you later, never talk to you again.
Absolutely.
Right.
So Joyce, you mentioned just briefly about FCCB, which, by the way, what's that stand for?
The FCCB is First Citizens Community Bank.
So we know from our experience that when you have everything done in-house, that means that you, representing, say, a buyer in this case, you have people that you can go directly to the underwriter who's overseeing, the loan and who knows the rules for that bank. You can work directly with them. It's not like you're calling some company in California and getting a different underwriter every time you get on the phone. This is the exact opposite of that. So that definitely
we are a direct lender for Fannie Mae, Freddie Mac, represent FHA, VA, and you're absolutely correct. Everybody that I mentioned that's part of that team is somebody that I can text at 9:00 at night for answers if I needed to.
Yeah, that's huge. And that's what we try to tell prospective buyers when they're looking at pre-approval and they want to go to their, I'm not going to even name any banks or anything, but their lender, let's say, and I've never heard of them, or I'm a little leery of them because I've had bad experiences and I know other agents have had bad experiences, and you try and let them know that we have a preferred lender list because we know in this business you work with them on a regular basis. So we're the ones that know who's going to get them to the settlement table, who's not, or who's going to have difficulty getting them to the settlement table.
Yeah, it's important.
So we try to, tell our prospective buyers and our clients that is a huge, important piece of the whole transaction. It's almost like it is the whole transaction if they're financing.
Yeah.
Because without those funds, you're not buying a house. And if you can't get to settlement, you're not buying the house. So
Correct.
that is such an important part in the initial meeting that we have with clients, that we try to really, hit them hard with that, just to let them know, because we have had clients who didn't listen, and they said at the end, I wish we would have listened to you.
Yeah, well,
So
it's the truth. And the guidance starts with you guys, and we're not, like I said, we're not just looking for that, settlement paycheck. We want to make sure you have a good experience. And let's face it is stressful when you think about buying a home.
yes.
And it's stressful when you think about a mortgage payment. But my goodness, I saw in 2023 how rentals have increased, right? So,
Crazy.
if you're out there on this call and you're paying $1,000, $1,500, $2,000, $2,500, we can model you to get you ready to buy a home and know that we're going to get you to the settlement table on time. And the other misconception, it just popped in my head, but kind of on the same lines. You might say, well, I've already have a pre-approval. Like, I was online and I got one, and,
Yes.
Rocket Mortgage. And I'm going to say them because they just drive me crazy, because there is nothing fast. There's nothing fast. There's no good deed goes unturned. It's the same thing with that. And it's here's the thing, what the interest rate when you get a pre-approval and when you're ready to buy a house, it's an apple and a banana. They're two different things. Like, you don't get it to lock in a loan, to lock in your rate on that fixed rate until you purchase, until you actually purchase. And a lot of times buyers say, oh, I already got this pre-approval from somebody else and they were giving me this rate. And I'm going, well, they really weren't. Look at the bottom line. It's saying this rate is not locked. They're not seeing that,
Yeah.
So, but that's what we do. We stand by everything we do, for sure. And, if, like I said, if I had to lean on somebody in Doylestown, I could in a heartbeat. And I'm saying Pennsylvania, I want to make everybody aware, I'm pretty much licensed in the whole United States. So I can do loans. Our team can do loans everywhere. Yeah, it's good to know. I mean, there's some exceptions to that rule, but very little. So I'm very versed in the tri-state area, but I do loans in Florida, even like it's crazy. I even did one in Maine. So, but yeah, so we are licensed in most states.
Great.
That's a big advantage. I mean, people are looking to relocate.
Yes.
Yeah.
One-stop shopping, right, Joyce?
Yeah,
Exactly.
Yeah, that's what we hope, Rich. That's what we hope. But for our sellers out there, the same thing applies for the sellers getting their stuff in order, because the sellers have their own fear. I don't want to live in a shoebox. I don't want to live in a box. I don't want to live on the street. I don't want to live with my kids, right? And they get, if we put the house up for sale, what's going to happen? And the same thing goes for a seller who maybe has been comfortable in their house for 5-10 years. That maybe conversation is free, and getting your finances like looked at by me is also free. Honestly, you don't sign anything. And we say this, okay, if you sold your house for this and you have this much equity, and then you want to try to buy, because people have that thought you need 20% down to buy a home, which is hogwash, and even it applies to the sellers too. Like, why leave all that equity in your home if this is what I really want, or I want to downsize and I'm stop paying these high Pico bills, especially when you lose your power every 5 minutes, like last night. And so, but the same thing goes for seller. We can put your finances in order in such a way and maybe alleviate some of that angst, and show you our programs that could apply to you, like a bridge loan and how does that work, or a home equity, or get it in order. I want to do this in the spring. Lisa and Rich go out to your home and tell you, paint this, consolidate this, get rid of that. They get your house all pretty ready to go with suggestions. But I do the same thing on the other end and put you in order. Like, you have $100,000, $200,000 in equity. Well, you get a home equity line of credit sitting in place so you can then go to buy without having a house sale contingency. And as much as that sounds like empty words, they're not. It applies to sellers. basically sellers who are apprehensive because they don't know, right? So we like to sit with them and educate them on their options. So there are some good options out there for sellers as well.
Yes, that is so important because we need more inventory on the market. We need more houses on the market. And that's what we're hoping for this spring.
Absolutely.
That more people, what I'm thinking is everybody's so maybe getting tired of waiting and putting their life on hold. For people that wanted to move a year or 2 years ago when things weren't so bad, when things were good, rate wise, then they went up. Now they're just waiting and waiting and waiting for the rates to go back down.
It's not happening.
But they're putting their life on hold, right? And then
it's crazy.
And I tell people, I doubt we're ever going to see 3% again. I mean, it's not likely, especially not in the next year or two. I can't even imagine. I don't have a crystal ball, but
No,
I
mine
just
cracked
can't
too.
imagine.
Yep, mine. I had one, but it cracked. So it's the truth. It's just not there anymore. But to kind of expound on that a little bit, the market, like to give you some intel, at least from my point of view on this market, been around a really long time, decades, right? I could say that with all confidence and say this: rates are rates. You don't buy the house based on rates. You buy with your comfort zone. Joyce, I want my payment to be around $2,000. I'm just hypotheticating. Mm-hmm. Then we back into, well, based on the current market, based on this, based on everything, this is your comfort zone of sale price. And we take that a step further when I talk to borrowers and say, okay, well, you're telling me that you only want to spend $2,000 in rent because you're comfortable right now at $1,600. I mean, in a mortgage payment, and you're comfortable at $1,600. But did you know you don't need to spend X amount of dollars to buy this house? You can spend a little less, trim some of the fat in your debt. That's bad debt, like credit card debt, possibly even pay off that car loan that maybe is going to be paid off in 12 months. And a combination of if a buyer is looking at the 2,000, do you know that you have tax benefits from home ownership? Mm-hmm. That when you go to file tax returns the following year, you're going to get a little more back, or you're going to do better in your taxes. Therefore, that's considered an instant savings. Like maybe it's an additional $2,000 a year. Well, that's another $150 a month. Trimming your budget, maybe you could have went to $2,150 in a payment and bought that house around the corner that was $25,000 more. So all of this is conversation, right? And it's good conversation that we have to allow the buyers to open their eyes to see it from a professional standpoint. Mm-hmm. The market is not going to be anything you ever saw before, at least in my career. And I'm old, in my 60s, been around. It just can't be. Our whole economy system in the United States can't sustain it, number one.
Right. Exactly.
It just can't. And we should have, COVID just did a lot to us, and it did a lot, and it printed money, and, it's just stuff that we'll pay for a long time, right? As Americans. But in real estate, not stock, not anything else, I still hold real estate at the highest level of an investment. If people say, I want to invest, I need multiple investments, and they're into stock, and they're, into bonds or whatever they're into, real estate is still the top.
I agree.
Yes.
Yeah, it will never change. It has not. It's been that for 35 years. It will never change. It has sustained every economy. I bought my house at 16.5% relative to a $30,000 house in Cowin, Delaware County, but that's irregardless. It was what my comfort zone at the time, right?
Exactly.
So, and everybody has that, in mind. And, but keep in mind this, the market, it doesn't hurt to find out. If you're not ready, you're not ready. But what I know is you're wasting your money if you're renting. And if you're going to wait for rates to come down, you're a dog chasing your tail. You're never going to save enough money because every $10,000 that you save is only $70 in a payment a month.
Wow. Yeah.
I'd rather see that $10,000 in your bank account,
Right.
because you need it for Home Depot. You need it for Marshalls.
Oh, yeah.
You need it for them pillows that match that
It would
couch
be,
that your husband said you can't get, right?
it would be the pet store with us.
There you go, with that puppy or the kitty cat that wasn't leaving Lisa alone earlier, right?
Yeah.
So yeah, I mean, it's the truth. It's like, so that's the conversations we have. And, maybe if I can, I don't know the time on this. I just want to talk about a couple specific
Oh, yeah.
programs that maybe catch a buyer's ear.
Yeah, and I wanted you to talk about, like, what does somebody need to do to prepare, say, like, having a folder, say, pretend they have a physical folder. What would they put in that folder?
Oh, I love
for
it.
you?
I love the non-electronic dollar store folder, dollar store copybook. I love that thought process, because if you want to have a conversation with me and know what you need to do it, you need a current pay stub. You need a most recent year W-2. In this case, it would be 2023, which will be out anytime now.
Yep.
They have to be out to everybody by the end of January. A current pay stub, the 2023 W-2, possibly a tax return for 23, not just the W-2. By the way, a W-2 is what your employer gives you, guys. So that, and the tax returns what you file with H&R Block or whomever does it for you, TurboTax. That's the actual tax return, the federal one. You also want to have a current bank statement. If you're on this call and you have money in your mattress and you don't have any checking or savings accounts yet, don't do anything with that money. Talk to me first. But those who have the checking and savings, you want a month worth of bank statement, so we can just kind of follow along to see your payment history, see if there's anything else that pops out that's not on your credit report. And really, Lisa and Rich, that's it. We'll ask for ID later in life. Well, that kind of stuff. Well, we connect a lot of dots, but a simple folder with those three things are the only thing you need before you have that initial talk with me. And this way you can, now I should say, side note, if you are self-employed for 2 years or more, you would need 2 years tax returns to show me.
Right.
Okay. If you were always W-2 from an employer and just decided to go out on your own last June and you didn't even file a tax return yet, it's going to be hard to get a mortgage until you have an establishment of 2 years of your new business.
Right. Okay.
So just keep that in mind. So that's the simple thing in the folder to get started.
And how about somebody that is, say they started with a self-employed business, and you know how a lot of people, they write everything off and then it looks like they made nothing. So can you speak to somebody about that? Like,
for those who have creative accountants, we'll call them. And let's say you've been in business for a long time. We have special programs that sometimes we don't have to see your tax returns. We can use your bank statements instead.
Oh, good.
But you have to be a seasoned, self-employed person. You can't just be a newbie at it, 3 years or more. And then we can take a year's worth of bank statements and kind of drive an income from that instead of looking at your tax returns.
Okay.
That's number one. Number two, before we hit the tax filing season, and you are self-employed listening to this, and you want maybe me talking points on the do's and don'ts when you go to file this year, I'd be more than glad to help.
Great. How about if we insert your contact info right here, and we'll do it at the end as well.
Okay, that's wonderful. Thank you.
Yeah. So your name, phone number, and your email address, your website.
Do I actually put that in?
Yeah, you can say it, whatever.
Oh, okay. So first of all, it's Joyce McQuaid. Phone number is 610-656-6846. My email address is jmmcquaid, like in David, at myfccb.com. I'm actually going to input the message there too, but please verify your email to get full access. It's not letting me, Lisa, but I don't want to hang myself up either.
What's it doing?
It's being weird. It says input your message and then it doesn't let me. So
Input your message?
yeah, in order for me to write, I have to hit input message and then it won't let me write. It doesn't give me the keyboard. So that's weird, right? But that's me. I'm also like not a great techie person.
I
And
didn't even know you could do that. on
yeah,
there.
yeah, it's there. It's there for me to do it. So that's kind of weird. But if, like I said, if I also, the easiest way, even you can text me at the 610-656-6846, and I could text you my email address if you didn't get that. That might be helpful too.
Okay,
Yeah.
great. And
Well, I just want to mention, Joyce, that if you are open to it, we'd like to have you on again because there definitely could be a part 2 to this, especially after people hear you and maybe contact you with their own questions.
yeah,
And
we're going to have her on in March.
Yeah, no, that's fabulous. I would love to. I would love to.
But
Go ahead.
I was just going to say before, we're not done now because we still have to hear about some of your programs that you have.
Right.
Yeah.
No, that's what I figured, because I was just going to say March will be great because one of the programs that you said March and a light bulb went on. So let's say you are a first-time buyer out there, and let me explain what a first-time buyer is. A first-time buyer can be somebody that owned a house years ago and has been renting for 3 years or more.
Yeah.
First-time buyer can be somebody that's never owned. That's obvious. But, for those who have houses years ago and has been renting or living with parents for whatever reason since, at 3 years or more, you qualify as a first-time home buyer. So that's kind of cool to know.
Yeah.
So a first-time home buyer programs that we have, as I mentioned, every kind of work history out there we can handle, but one's particular that comes out once a year. And it is a community reinvestment program, AKA First Front Door. And First Front Door, it's a grant. It's a grant that if you could get for every dollar that you want to spend of your own money, they give you $3. So up to $5,000 in First Front Door grant money can be given to a first-time buyer who wants to purchase a house in 2024. And the cool thing about this is a few cool things about this. The First Front Door opens in March, right? There'll be an opening time, and you actually get in touch with me at that phone number and we get you registered. My team, we get you registered for the grant. Now we register it based on where you live and where you work now. We work with your credit. If you have credit issues, let's just say you qualify for the whole 5,000 based on your comfort zone. That means you have an allotment waiting for you when you are ready to buy, and you pretty much can spend the rest of the year looking for a home. It's nothing that you need within 30 days. You could wait 5 months and then you find a house just because you had to take 3 months to get your credit together, right? Or you were waiting for a bonus to come in to buy, or whatever the reasons are. But this is a $5,000 grant. And if you stay in the house for 5 years or more, it's forgiven. That means you don't pay it back.
That's great.
Yeah, it's pretty cool, right?
Yes.
Yeah, it's a pretty good thing. I mean, if let's just say you only lived in the house for 3 years and you have to pay it back, not a big deal either, because you built equity in that 3 years. And for my new buyers that are on this call, equity is the money, is the difference between the balance of your mortgage and the value of your home. And that difference, if you have money, it's called equity. So when you go to sell, a normal equity is about 4 to 5% per year. Appreciation is built in the house. But Lisa and Rich come back to you 3 years and say, this house you bought for 200,000, now it's worth 250. Well, the easy math is, and I only owe 175. I have $75,000 worth of equity in that house.
Yeah.
Well, what's cool is that grant, even if you have to pay it back, it got you in the house 3 years ago.
Yeah.
But you could just take it from your equity. You know what I mean? When you go to sell, it's considered a lien on the property. So what that means is a lien, a mortgage. When we give you a mortgage, if you're buying a house for 200,000, we're going to lend you, let's just say we lend you 175,000 of that. That's $175,000 mortgage. Every month you make your mortgage payment, you're paying us back. That's a lien. That'll be in first position. First front door will come in second position. So a title company kind of keeps track of that. And they record it in the courthouse in Delaware County, Chester County, and wherever else you're purchasing. So it's just good to know that you figure out what the lien is, but it is forgiven if you stay in the house for 5 years.
That's great. That is free money.
It is free money.
Really is. And
well, I would ask then, how important is early registration in a program?
That is a fantastic question.
Yes.
So it is really important because this is a program that actually shows itself over a 3 to 4 month period of time. It opens sometime in March, usually the beginning by mid, and it closes by July normally. Sometimes in a hot market, it could run out in June. So every bank is allotted money. This will be my 7th year with First Front Door. So every bank gets allotted X amount of money. And when that money runs out, if you don't use it, you lose it, right? And it goes into another pool for the following year. So it's just how it works. So let's just say you apply for the lien, the grant, you make application with FCCB, we have you there, and you never buy a house. You're not obligated to anything.
Wow. So there's no risk for the buyer.
There's no risk for the buyer.
Wow.
That's great.
Yeah. So that's a pretty
Great
cool
timing.
thing.
And First Front Door has income limitations though, right?
It does. And it didn't come out. It usually is for how many persons are in the house. One person, 1 to 2 people, then it would be 3, 4, 4 or more. So it depends on how many people are going to be living in the home.
Okay.
Right.
And the income limit is directly to household income for anybody over the age of 18. So if you are in a situation where you have a husband and wife and the husband has really bad credit and the wife doesn't want him to go on, but the husband still works, unfortunately, we have to use the husband's income. You can't say you're separated or haven't lived with them unless you can prove all of that stuff. So, because they do track it. And, but that being said, the income limitations are not out yet. We usually get them in February. To give you, I'd be lying to you if I knew exactly what 2023s were. And I meant to print that out earlier and I forgot. But somewhere in that, mid upper 50s for one person,
Okay.
upper level 60s for 2, it kind of works that way.
Okay.
So
Right.
it's definitely not going to be high income people that need the grants, because they just assume it's moderate income people that need these kind of grants.
Right.
Right.
Exactly.
Yeah.
Yeah. That's
And,
great.
yeah, which is kind of cool. So to kind of maybe layer that with a brand new program that FCCB just came out with, it actually rolls out January 15th for all new applicants, and has nothing to do with that First Front Door. I should mention, it's Delaware, Pennsylvania, New Jersey, everywhere I'm licensed. Okay.
Great.
And it could work with FHA. It could work with VA. It could work with conventional. So it's not a type of program. It is a grant. Does that make sense?
Yeah.
Okay, cool. So that works with everything. So to layer that, First CCB Bank just came out with this. It's called Home Achievable. It's the first time I'm putting it out there. And it's going to work for most of Delco, Chester County, Montgomery County, and that PA pocket. It could work with First Front Door when it comes out if they need the assets. But it's a 3% down loan. You could just put 3% down, obviously, plus closing cost. It has I don't want to get the technical, like back end, talk about that, because I'm going to lose a crowd there, right? But if you qualify for this, the beauty of this loan is you get to put 3% down and have no PMI, right? It's conventional. It's conventional. Yeah, it's conventional only. But it's a Fannie and Freddie. We work with Fannie and Freddie on this. And what's kind of cool about it is, for anybody listening, that if you're looking to get a mortgage, anytime you're looking to get a mortgage in a conventional way, normally, not normal, but people that put 20% down are not, they feel like you have less risk. The bank feels like you have less risk. When you put less than 20% down, you get assessed what they call private mortgage insurance, PMI. PMI is a warm and fuzzy insurance. In case that you default, the bank gets paid back. Right. That's all it is. And it could be assessed into your monthly payment. So PMI can affect your monthly payment because it gets added to that loan that you're paying back. It gets added to 1/12 of the taxes, 1/12 of the insurance. It's part of your mortgage payment. So Home Achievable program allows it's 3% down with no PMI.
Wow.
Kind of cool.
I've never heard of a program like that.
It sounds like a game changer, Joyce.
I mean, I know there's lender paid MI, mortgage insurance, but
a different animal that's vanilla, that can work on any type of loan. There's buyer paid MI, lender paid MI. Yeah, there's a lot of ways that we could do the PMI, but this particular program for first-time home buyers only, is going to be kind of cool in this market.
Yeah.
Are we talking fixed term? And if so, then how many years?
Absolutely. Fixed term. And I'll tell you what I did was, it's safe, it will allow me to open. I wanted, because it doesn't come out until next week. Oh. Literally, I wanted to get an idea to give you an example of where the rate would be today. How far, if it's off the mark, if you hear me tapping, I'll tap into my computer here. All right. So on the lines of that, let me see if anybody answered me. No. So truth be known, we had a lot of outages in Montgomery County, and some of our branches were affected. And Doylestown was one of them. So it could be that these guys, like literally so much is down today. So I never got my answer back. So I don't want to fudge, and I don't want to even pretend I know. I'm sure it's a little higher than the normal interest rate, not lower. Mm-hmm. But not a lot. I wouldn't think by a lot, to be honest. Wanted to not confuse anybody, but these two great programs are out there. But we talked about credit in a hot minute, right? When I said PMI, and credit, or maybe should I continue with programs? Because I have some important points about credit as well.
However you want to do it. It's fine.
Yeah, I just said, PMI, is a thing that gets assessed to your monthly payment. Some of these programs, a lot of these programs, First Front Door, Home Achievable, PHFA, KFIT, which is a Pennsylvania first-time buyer's second loan, get free money if you stay in the house for 10 years. 0 interest. It has income limits. It has credit score limits. So put a note in that for a second. That's another program that we have that's out all year round. It doesn't expire. And, it can go up to $180,000 in household income. So it's robust. Oh. And it gives you 5% of the sale price in closing cost assistance. and you don't have to pay it back as long as you stay in the house 10 years.
What? Wow.
Yeah.
Great.
Or if you stay in the house, every year you stay in it, 10% of it gets forgiven. So, if you bought a $200,000 house, as an example, PHFA K-Fit or K-Flex will give you $10,000 towards your closing cost at zero interest, no payment back. And if you stayed in the house 5 years, you owe $5,000 back. Well, you don't physically pay it. You take it out of your equity, right?
Exactly.
So it's kind of another cool program for closing costs that is out there all year round. You don't have to wait for it. But all of these programs that I'm talking about have credit score requirements. And it's, and I think that's important, why it's so important to talk about credit, right?
Yes, it is.
Yeah, Credit Karma is not my friend. So, and what I mean by that, I think everybody should have a credit monitoring system. Whether it be through their credit card, through Credit Karma, everybody should have it because there is so much fraud out there. Side note, case in point, airplane ride, American Airlines, fill out an application to get free airline tickets, that whole thing that they give you as you're ready to get off the airplane. And 3 months later, you have a $4,700 balance on a credit card you never applied for because of fraud.
Oh, boy.
And if I did not have, because this is a personal story, if I did not have a credit monitoring, whatever, that showed that this happened,
yes,
I would have never known that somebody applied under my name and my social.
Right. Wow.
So, but it never gives me an accurate credit score the way a mortgage company looks at it.
Right.
So Credit Karma, your Discover, your Credit One, your banks, they're going to give you your FICO score. They're going to give you, a score, but it's not how we see it. So we use a tri system, Equifax, TransUnion, and Experian tri-merged. And it's the hardest hit you'll ever get when somebody pulls your credit. So if you're coming to me and somebody just recently ran your credit, you owe it to yourself to tell me. I am, as I said, a confessional. Tell me everything. Tell me that you see in Credit Karma that you only have a 350 credit score. Tell me, and then we're going to have a conversation because by me pulling it is going to do further damage.
Right.
So you have to be honest with me so I can properly guide you. And I can give you some quick fixes to get your credit scores up. I can tell you how to establish credit if you never had it. I can tell you the do's and don'ts of what to do. You might not be ready for the full application. We could have that conversation too. As I said, we help you set the table, but credit scores affect everything. Credit affects your buying power, what your rate is going to be, if you qualify for buyer or for these programs or not, because they all have credit score requirements. That's the beauty of circling back to First Front Door. When we initially had these conversations with borrowers, Rich and Lisa, that we're going to be able to say to them, hey, this credit score is 575. Guys, I need you to do these 5 simple things over the next 30 days, and we can get you rocking and rolling and in Lisa's car to go look at houses.
Yes.
And that's what we do. And First Front Door will still hold that grant money for you. Even if so that's kind of cool. It only works on the calendar year, but it's kind of cool why we fix your credit. I have buyers that I have nursed credit back that come back to me a year later and 18 months later said, Joyce, thank you so much. I never thought I'd be able to own a home. And I take a lot of pride in that. And
wonderful.
It is.
It's very
satisfying.
And the thing is, if they don't start, I try to tell everyone, start right now, even if you're not looking to buy a house for a year or 2 or 5, whatever.
Yeah.
Start now, because having good credit, having some savings, it opens more doors and opportunities for you.
Totally.
And you have options. You're not stuck.
Exactly.
And
Exactly. You'll never know if the answer is no. Like if you don't ask, the answer is always going to be no. If you continue to rent thinking you have to save more, credit more, and never got it from a professional that you can't do it right now, or this is what you take the steps to do it, then you owe yourself. It's an injustice not to figure out how to do it, especially if we're offering it for free.
right.
Yeah. And I mean that, Lisa and Rich, they don't sign anything. I mean, yeah, you fill out an application, but
Right.
if this is going anywhere and we're babysitting credit, that's what we do. We don't call you at midnight, breathe heavy, send you bad literature in the mail, nothing like that. It just doesn't work that way. The whole objective is it's all about community reinvestment. And I made a living, even when I sold real estate in the 80s, it was always with first time buyers. So I work with second time and third time and investments and second homes and all that. But, my bread and butter has always been educating first time buyers. And I appreciate you allowing me on this podcast today to kind of talk about it.
I love working with first time home buyers too. I don't know, there's something special about it.
Yeah.
Getting someone into their first home.
Yep.
That's a big deal.
The American dream. Yep.
Yes.
Yeah. Don't let the news media or anybody else tell you that you can't buy a home. Get it first from here. Yeah. Don't listen to what's out there. And, even parents can be like a killjoy. They can, I look, Cheerios years ago came out with an advertisement. It's not your parents' Cheerios, when they started changing the way the boxes and, kind of reinvented Honey Nut Cheerios and all that. And I always like to say that to borrowers, this is not your parents' real estate market,
Yeah.
I am in we've owned homes for 45 years. So we've been doing this for a long time, but even my adult children, know that I give them the same speeches, they get the same speeches. And I always like to treat buyers as if they were my children, without being condescending, for sure.
Right.
Yeah.
I love that. That's great. That is, and there's so many people out there that really do want to buy a home and they just don't know where to go, where to turn, what to do. They have bad credit, or they're not sure if their credit's bad because they have no idea what's on their credit. And that fear, like I have talked to so many people that they're afraid to take that step. And I always tell them, listen, we've all been down the road that something has happened at one time in our life or another where, our credit wasn't perfect, or, things happened and we had to, build things back up, so that's why we, we're able to help. I think that's why we're able to help people, because
we were in the trenches. Absolutely.
Yes, we've been
absolutely.
there.
Yep.
And we know that we can come out of it, and now we can help get those people out of the trenches.
Absolutely.
Get them, and then they can help people get out of the trenches in some way or another when they're out of it. So
yep,
it's a nice cycle to be in.
It is.
When I guess especially when you know what it's like, and like you said, there is no judgment. There's nobody's gonna wave their finger at you and say, you terrible person, you.
No, on the contrary, is like, everybody's got stories. Everybody's got stories. So, I learn every day. I'm sorry. I learn every day. So it's, the idea of being able to find something new that somebody has, when I look at their profile, I'm always willing to learn and, just to give the advice to, this is how we're going to do it.
Yeah, that's great. That's what's needed.
Well, Joyce, it's obvious that you have a passion for what you do.
Yes.
Well, I thank you. I really do. I always love working with you guys. And I appreciate the opportunity to be on this forum.
Well,
well, we are very happy and thankful to have you.
you are a great guest.
Yes, and we'll look forward to having you again
All right.
in
Thank you.
March.
Yep.
And give your contact info again. So we
Okay.
know.
It's Joyce Mc Quaid, 610-656-6846. Shoot me a text and I'll shoot you my email address and website. It's probably easier that way since I can't type it, but that's FCCB Mortgage. And like I said, give it a shot, guys. You never know what you can do until you ask the questions. So would love to help.
That's right. Yes.
Be encouraged.
Yes.
Empower you. Let me empower you with
Empower
the
you,
information.
That's right. And if whoever's listening, get in touch with us or get in touch with Joyce first and we'll connect. And
Lisa, why don't you give everybody our contact information as well?
Yes, our contact information is we're Rich and Lisa Small with Realty Mark Cityscape. Our phone number is 610-764-1371. And we have an easy email address. It's just richsmallteam@gmail.com. So yes, you can shoot us a text as well or call or email and set up, either we can talk on the phone, Zoom, or meet in person, whichever you prefer. So,
right. And
yes.
our hope is that we've made your life just a little easier and your day a little bit better. And that if you do have questions, don't hesitate to reach out to us, Rich and Lisa Small, or Joyce Mc Quaid. And I think you can realize from this conversation that we really can take you from A to Z in this whole process, beginning at the very, very most basic thing, which might be just rebuilding your credit, all the way up to the settlement table, where you will be happy with the final result because we will get you there and we'll be in your corner the whole time.
Yes.
That's
and we don't like surprises. So we try to be one step ahead of everything.
Exactly.
And that's just how we work. We make sure that everybody's doing what they need to be doing. It's kind of like being in a supervisory position and making sure if there's anything that needs attention, we take care of it and get that done ahead of time so that we're not sitting at this settlement table with surprises. Because
we don't like that.
That's no fun.
We don't like that.
Yeah. So
all right, Joyce.
All right. Happy New Year, everybody. Looking forward to it.
Happy New Year to you and everyone. Thank you so much, Joyce.
Thank you, guys.
Wonderful
Have a great
having
day.
you.
Take care.
All right. Bye now.
Bye-bye.
Bye now.